to the closing beat, everybody. Where you at? Oh, it's over here. Happy Tuesday, everybody. It's not Tuesday. It's not Monday. It's Tuesday. A long weekend. I had plenty of time to relax and get better. Still a little stuffy and everything. Welcome, Financial Wisdom. Eloy. Mike is here. Matt. I love it. Does that sound funny? Doctor, of course. Mr. Horton in the house. We are financial advisors here, and we talk about the stock market, give you an update like no other advisor can. You've seen, we give you the data, we go over all the different talking points that are not your typical, like, buy this stock here, buy this stock there. We take it from really an investment standpoint there, and you often do not find or probably cannot find other advisors that will talk about the markets like we do, because most of them don't know about the markets. They focus on planning and everything, but I'm happy to be here. Also, you have to go check out our, where do we post it? Instagram and maybe on YouTube there. You got to check out the hazing of the new guy. So you remember when Eric started here, we closed all the doors. So and when he showed up, we put a seized by the SEC sort of thing on the door, so that when he came to work for us, he'd be thinking like, oh my God, my first day here, and they've been, seized by the IRS and the FBI and everything. And then we filmed that, posted that. Well, the new guy, we took a page from the Wolf of Wall Street. So on Tuesdays, we do our meeting all together in the room. And we took a page where the meeting starts off, I won't tell you how it goes, but where the meeting starts off like the Wolf of Wall Street there. And we just wanted to see if he would go along with it. And he did, man. The man's over in the corner just going along with it. Just like, I don't know what the hell's going on here, but I'm in. But hilarious, man. It was a fun sort of hazing trick for the new guy there. And maybe he'll be on joining us, maybe a little camera or something here and there every now and then. All right, enough of messing with the newbies here. We like to play our jokes, of course, but markets overnight. So overnight, we actually had some good news out of China. If you were looking around there, a lot of their econ numbers, whether you believe them or not, were stronger. Industrial production up 1.3%. That was better than just the slight 0.1%, I think, that was expected. That was good. Consumer retail was expected to fall quite a bit, almost double digits. It only fell by about 1%, so that was good news there. Again, people have their concerns about the data that comes out of there, but, we'll take it for what it is. And their GDP numbers came in. Growth came in at 3%, which was way better, literally 10 times better. Yeah, 10 times better than what was expected. So, every little kind of rosy over there, which is good because this would be their second weakest year since like the 80s. And I don't remember exactly that data point. So initially we had some good news there. If you go on over here to the charts, we'll take a look at the S&P. We did start with a little bit of a rally. Even overnight, we had a little rally for a while. Remember, the futures market was open yesterday, so even though it was a stock market holiday, futures markets were open. We started higher, and it just kind of bled lower throughout all of Monday going into last night. And today, like I said in the title, just kind of looked like jello on a plate. And what I mean by that is if you go to like a 5-minute chart. Here's today, right? So if you go into just today's performance, what happens if you're holding a jello on a plate and you're walking around? It bounces, right? See how it looks all wiggly and weird? Meaning there's no trend. There's nothing to glean from that. You can't get excited about buying, selling, doing whatever. But why was it like that? Look at where we're at. We're still battling the downtrend. So every time we've hit this downtrend, we've just essentially rejected it. No one wants to buy right there, and today remains the same thing. It's another push to try to get above the 200-day moving average. We had a 2.7% gain last week into it, and people are just saying, hey, I don't know that I want to buy here. I see what happened every other time. I'm not sure that I want to be the only guy or girl that buys here. So a lot of optimism out there, but essentially, it's the next catalyst. What's it going to do to get us moving there over that? We'll see. I don't know. There's a lot coming up, actually. And we have earnings season. So your earnings season's underway. There's been just over 30 names that have reported so far for earnings season. And more than half of them have had the word recession in their transcripts at least once. There's a fun thing you can do where you don't think I actually read all the transcripts, right? You can actually search for different comments and things like that. And the word recession I just found was in more than half of them there. Of those, you had basically all of them reported the name recession at least twice. Right? So there's a lot of talk of that. So not so great. Earnings season's about a mixed bag so far, but it's early. It's really, really early. So no need to what do they call it? Boo-hoo or poo-poo on earnings season, I guess is how you say it. I don't know. I'm 40, so I have like this mix of like young guy phrases, I think, right? And then some that are like old guy phrases. You know what I mean? No? You don't know. Oh, I said smack the other day. Yeah. Oh, you were talking smack, right? That's at least 2001. I've been told it's cap, right? Cap is a new word. That's right. You know what I mean? That meant a whole different thing when I was a kid, I'll just say. But times have changed. Anyways, okay, so that's what you got going on with the S&P. I want to come back to this here in just a second. Is this the beginning of the new bull market? Right? And what if it is? Because there's a lot of you that are saying, I got some cash, I want to wait for the next dip, whatever. What happens if we're in the next bull market right now? I want to talk about how that looks. I'm going to share some data with you here in just a second. Let's bounce over to the NASDAQ and see, is this 7? Oh, it did finish positive. So that's 7 days in a row for the NASDAQ. You can see it. I don't need to tell you that one there. It was up every day last week, gained 4.8%. That's the best performing index so far this year. With about, well, after today, it's going to have 6% total gains year to date. It's not bad, right? I mean, that's actually really good if it holds. S&P's at 4.2 if you're looking around. So, otherwise a really strong start. The trouble is, this is where it's coming from. Unless you started investing on day one of this year and said, you know what, New Year's resolution, I'm in, let's do it. Yeah, we're all just sitting back like, that's great. Okay, can you give me some more? Let's get back. Let's get back and doing these things. The Dow, once again, oh, no, actually, today actually pulled back. That was the weakest, and unfortunately, that was a lot of the bigger names. Goldman Sachs had earnings, and it's a higher-priced stock in the Dow. Remember, in the Dow, the higher your price, the more say you have, and that's one of the top highest-priced ones there. They had a 6% down day. That's your biggest contributor to the weakness in the Dow today. Crude oil up a buck. Yeah, about $1.20, somewhere in there. Gold down just a little bit. Not much to say with gold. It had a nice little run. It looks like it's just taking a break. It's kind of like the market here is trying to figure out where the next little move is going. And so we'll see what happens there. Now let's go back to this. The S&P. This is a beginning of a bull market. You ever wondered what that looks like? And I want to just say it like this real quick. I did this class for clients. We went all through the details and everything. But let's think about this for a second. If you could buy the bottom of the market, how long do you have to determine that that's the bottom of the market? In other words, does the market fall and then just stop one day and start going higher? Does it tend to fall and then once it does hit a bottom, again, this is hindsight, does it tend to wiggle around near lows and like stay there for a couple weeks? Do you get a couple months? How does that work? So we wanted to actually take a look at that. We did this with clients. I'm going to share this with you. It's going to scare you. Don't let it scare you. Hold tight. We're going to walk through this. So here's the end of every bear market and beginning of the next bull market. And the only way we know that, right, of course, is because we can look back and see that. We don't know right now if this is the beginning of the bull market. So let's use what history has and see if we can determine any length of time that we have at a bottom of the market. How long does it stay at the bottom? So I'll start at the top here because it only gets worse from there. 1956 to 57, so just showing you the data points used to collect the actual results here. Total decline. 3 months before the end of the bear market, we fell 19%. 1 month before, we fell 10%. Then you would, right here, I should put a line right here, actually. Right here's the bottom. And then after 1 month in the new bull market, you gain almost 5%. 3 months later, 5.7. So the question was, how long did it stay, in this case, within 5% of the ultimate bottom before giving you the 4.8% rally to 5% rally? In this case, it spent 55 days. Think about that for a second. Down 55 days for you to think about this being the bottom, then 5%, then 5%, and so on, and off to the races there. So that's not bad, right? You got 2 months to decide whether you want to buy cheap or not. Why I say it gets worse from there, look at how often markets spend less than 20 days at the bottom. In 1961 to 62, it only got 12 days, 12 actual trading days, right? Then 16, 7 in 1969 and 70, 9, 16, so on. So in other words, we have an average of 14 days, median of 11 days that you get to spend at a bottom. I'm sorry, within 5%. We got to be fair. I don't think I said that enough. Within 5% of the bottom. During COVID, 2 days, man. It was a 2-day bottom, meaning it fell, and then somewhere between the fall and the bounce, that was greater than 5% in 2 days. If you were around, you remember it, you know, and all that. But you had 2 freaking days to do that during a pretty scary time, actually. So the moral of that story is trying to time the bottom that's why people say you can't time a bottom. Well, you can't time a top for that matter either, but that's why people say that, is because the data shows you have to be on your game to be able to spot that. And if you got, truthfully, if you got anywhere within a 5% range of whatever the bottom in the market is, you did better than average, right? So that's what that's telling you. Look at your, you know, where you invested your dollars. If you were within 7 to 10% of the ultimate bottom of a bear market, not just any drop, a bear market, then I would consider you an above average investor, right? If any dollar went in there. So keep that in mind for those of you that say, I'm 100% cash and I'm not doing anything until I see whatever you're looking for. You better be quick about it if you're not going to maybe average in or do whatever you're going to do. Right? Right. Okay, moving on. I want you to, if you're one of our clients, real quick, I just want you to go over and take a look at our notes from Jazz. We talked about some things here this weekend. Every weekend I put together a class, email. And one of the things that I did is I went through and I said, well, let's talk about inflation again. We did this about 3 months ago. We talked about how quickly could inflation be falling. And then we also shared the ideas of backdating your contributions and a few other things as well. So I hope you'll go check that out if you're one of our clients. It's kind of shocking how quickly inflation is falling. How do we get ahead of that just in case everything works out either according to plan or better? What's the advantage? What do we do? Anyways, sharing that with you, so I hope you'll check it out. One more thing. This will be data-driven here as well. I get the question every now and then about industries. You know how we look at the stock market, the index every day, and then we tend to go down to sectors. Well, the next phase is industries. Right? So you can look inside and even fine-tune it a little bit more. And someone had said, how are all the major industries doing? I don't have time to go through all of them, but I thought I'd go through some of the fun ones that everybody likes to look at. So here we go, real quick, in very plain, clean English. Let's look at solar. That question's come up a lot this year because of the Inflation Reduction Act, which doesn't say solar anywhere in it, but nonetheless will benefit greatly solar companies. Here we go. So this is over the weekend, so it doesn't include today's. Over the last 1 month, looks like a mixed bag. So far, year to date, these are pretty impressive returns. Granted, they're off of bottoms, but you have essentially 39% off bottoms. Enphase still working on it. First Solar, 20% just year to date. What is it? The 17th of the month. That's all it is. 17 calendar days into the new year. 11% for Solar Edge. Great, we own it. SunPower, 3.5%, and so on. So in other words, there are some stocks here, First Solar, Solar Edge, and Canadian Solar, that not only had a good year, but they're continuing to have a good year. Some of them bouncing off of bottoms in here, right? It's kind of a cool way to see it, isn't it? Well, I thought so, so then I did a bunch more. 3D printers. What happened to that? That was a big deal. That was all over TV. Oh, I got 3D printers. They're going to make everything. Somebody made a gun out of a 3D printer, and then now we're scared of 3D printers. And then we were excited because they were making medical things that people could use. And oh my gosh, this is great. Well, 3D printers have actually come an extremely long way, and they're cranking. But they had a rough year. Look what's happening so far this year. So over the last 1 year, double-digit losses. They're not immune to anything like everybody else. But this year so far, look at how quickly they're coming back. Look at which ones are quickly coming back. The big brand name everybody seems to know about in the market is 3D Systems. But man, that's kind of interesting, huh? And they are one of the hottest tech-based industries out there right now. But you'd never know it. It's not like we're talking about this. You don't see it on CNBC and stuff, so I thought that was interesting. Cybersecurity, not one of the tech-based best performers so far this year. It had a rough year as well. There hasn't been any real big headline attacks, hacks, so not too much going on here. Off to a slow start, although as a whole, slightly positive for the year. So you would say they're market performing. They're not doing better. They're not doing worse. They're just kind of floundering around there, doing just like the market does. Looking a little bit further here, always popular, your vices. what you smoke, what you drink, you know, all that stuff. We got Philip Morris in here. We got Boston Beer, Anheuser-Busch, Altria's in here somewhere. There it is up here. You basically got your tobaccos and you got your alcohols inside of here. Constellation Brands was just reported. These have gone back to slow and steady. If you're okay with investing in this stuff, you're generally okay with investing in it because of the dividend, right? How many more people are going to just wake up and decide to start buying more cigarettes? You know what I mean? It's not a thing, but they pay a hefty dividend. Or alcohol, they have some seasonal effects in there as well, but you usually look at that stuff for dividends. That industry has gone back to doing things like that. Hollywood on fire, baby. There is a new bull market here in Hollywood, which had a rough go. It's kind of had a rough go since COVID for the most part. But if you look year to date, massive rallies here in Disney sticks out to me. But of course, Netflix, you got Lionsgate, AMC. I don't know what that's all about, but nonetheless, they're on the list there. Strong rallies in anything in the communication services related to Hollywood. And lastly, the good old green space. I can't say the word, or we're not allowed to keep this video monetized, and the $6 that we make off of doing these classes a day we use. So I'm not going to say it, but you know what sector or what industry we're talking about. Apparently there's excitement there again as well. Really, really rough one-year performance. Every one of these are like rock solid off the bottoms, but you got 20% gains, 23, 17. I haven't looked into it. I don't follow this industry much, but you have something going on. And by the looks of it, it looks like a little consolidation is driving the industry forward there, because that one there, right? You see what I'm saying there? All right, last week, our Wine and Wealth with Eric, actually, came at you there with some maybe New Year things to consider with your dough, and specifically how to go about that. So, would you stop it? You'd be thumping away over there. It would maybe behoove you to check that out if you're one of our clients and or research members. What else do we have? Oh, let me go briefly here through the stocks in the news, if you don't mind. I'll take your questions, because I did ramble a little bit today, but whenever you give me a long weekend, man, I just start going crazy. Yeah, just put things together one by one. First off, there we go, Cleveland Cliffs. This is a steel company raising their prices by $50 per ton. That's actually good news for them. Maybe not good news for industrials, but good news for them. Goldman Sachs out with their earnings weaker than expected. Little bit known, I didn't point it out, but this may be a little bit known because they were talking about how they were going to start laying people off, and you're like, why are you laying people off if everything's going so well? Everything's not going so well. Morgan Stanley, weaker than expected as well, better than Goldman Sachs. So if you had to put money somewhere today, it looked like money was going over there. About a 6% gain for Morgan Stanley. Certainly helped the financials as a sector. Whirlpool trying to give some good news out there. It's a tough business to be in, especially after what Cleveland Cliffs announced today. But you've got full year guidance raised for them. Sales is their problem. They said lower sales, higher income. Lower sales, higher income, meaning our margins are going to stay high. We're going to sell less big old washer and dryers. Why can't we make those smaller, by the way? So big old washer and dryers, we're going to sell those. Not as many as we used to, but we're going to be able to keep our prices the same, or our costs have gone down, so we'll still make about the same margin there. And they had some positive things to say about the supply chain as well. That's a typical company that people look at and say, tell us about the supply chain, because of all the stuff that goes into making their products comes from everywhere. They've got their hands in everything. Travelers Insurance came out and said winter's been a little bit tough here, so they lowered their forecast, all because of all the big winter storm that just came right through the holidays. And it was kind of nasty there. So bad news for them in the short term. It is one of the bigger, higher price stocks there in the Dow, so that could do the trick as well as far as what caused the Dow to drop today. Our Jazz After Dark is going to attempt to be live tonight, brought to you by Dustin in his home studio office. We are going to talk about a specific client event by using our planner, how it made me think of something that is a little bit odd, that's new, that we could probably implement for this client, and it may apply to you guys as well. So just this once, I'll let you in on it. A little bit more complex financial plan for somebody who, by the way, is only 30 years old. So this is not like someone with superiorly complex finances. Okay. What questions do you have for me? Ooh, some new features here. Okay, let's go like this. And I'll see if I can answer your questions. I love it. Okay, are you guys like telling jokes to each other or something? How do you support the stream without being clients? You're not actively investing. We're not active investors, so that let's be clear about that. We're long-term, usually retirement-focused or goal-based investment services, in addition to planning and everything that comes along with that. But you just being here means enough to me, man. That's support in itself, so I appreciate that. Making $3 an hour. Yeah, I would say if we make $6.25 per video, the time that's spent in it, yeah, I'd say it's less than $2 an hour. But I have fun with it. I have fun with it. You want to start a... Oh, let's go like this. I can move this over here. Get this out of the way. Maybe one of these days when we start making like $7 a video, I'm going to get another monitor. It's on my Christmas list. Okay, so you want to start... where'd you go? There was a position you were talking about. Small caps, Vanguard small caps. Okay. So why this one? Just out of curiosity, if you want to have that small cap exposure, that's curious. Interestingly, did you see that people are now starting to sue advisors and ETFs for putting them in low-cost funds? Because the low-cost funds didn't perform as good as the slightly higher cost funds, and people are mad about that. It's like, what are you doing? Like, you were unhappy when you were not in the low-cost fund. Now you're in the low-cost funds, but they're costing you in performance, and you're like, now I'm mad. That's crazy. So I was curious about that. I do think small caps will pull back, though. And we don't use funds, right? So you can't sue us. Yeah, once I get another monitor, I'll probably say I want another one. But, it would just, if it will help, that'd be cool. Buy treasuries through your brokerage, Treasury Direct, ETF exposure. Oh, I'm not sure if that's a question or not. You can choose to do any of those, actually. Yeah. Grinding is into the options game. Okay. And so you've had Westrock. You sold a covered call at 40. Ooh, and they have earnings coming up. February 17th is your call there. Fingers crossed. Well, that's a good option. Okay. Well, yeah. And you got to knock down your cost basis a little bit there, too. Right? Nice. Are you still offering the 401k investment choices review? Actually, we can do it now. We can physically do it. So a lot of our clients say, hey, just physically manage the 401k as well. You can link to it in the portal, our own portal that we've built there. And then you can actually follow along and watch and everything. But you essentially give us authority to kick off the other guy and manage it for you. So yeah, we absolutely can. You think Disney can pull back this week? Oh, that's right. Yeah, would like a pullback, right? I think you're probably right. You think we're breaking the downtrend, J-Dub? Hit resistance in fall? Yeah, I don't know. I would say today was strong at that. So here's how I would look at that. I kind of am optimistic about it because as soon as this thing clicks and we go over here, what happened today? We didn't fall apart away from the trend. What's happened every other time? We had a pretty good indication that we were going to bump our heads against that wall and pull back, bump our heads and pull back. Intraday, actually, bump our heads through it and pull back. That, I feel like that held up pretty good. So I'd be a little bit more optimistic in a way there. Yeah. Instead of suing advisors, maybe get another job. Oh, yeah. I'm like, I would just stop doing this. If somebody sued us for that and they're like, oh, it's too cheap, I'm mad because it's too cheap, I would say, that's fine. I'll just go back to doing what I was doing. Tell you a Disney secret. It's been a while. Yeah, it has been a while, hasn't it? Okay. If you know how they say, go do the rope drop thing? Oh, I'm going to go to Magic Kingdom. I'm going to go for the rope drop. The concept is you get there bright and early, they drop the rope, you go into the park, and you go racing to your favorite ride. Everybody does that. So when they drop the rope, go racing to some other ride. Go to Space Mountain if you're at Magic Kingdom. Don't go racing off to the new stuff. Do something like Splash Mountain if it's not cold. And then before the park closes, if you get in line, they will leave the park open and let you continue to stay for the ride. So you could be in the park while it's closed. Go to the good ride right before the park closes. You'll still wait a little bit, but you'll wait a lot less time. So that's how I do it. Especially if you're going to Hollywood Studios. Don't go to the rope drop thing, then race back to the Rise of the Resistance. That's what everybody's there to do. So you just all race to something that's going to take you an hour. Go do Tower of Terror. Go do something else. You'll be in line for 3 minutes, have a great time, and then you can go back to bed for a while. There you go. Happy to help. Serious tone of the stream. Do I have a serious tone? It's probably my cold. It's getting better. All right, I'll wrap it up and get out of here for you. I don't want you thinking it's serious. Oh, I don't want you thinking it's serious. We have covered everything. Yes and yes. Notes checked. Checklist complete. You guys enjoy the rest of your day. We'll be back tomorrow. I'll see you later, actually. Jazz After Dark. Come grab a drink with me and hang out. It may not start right at 7. Depends on what time I get back there, but I should be able to get everything set up and chat with you guys a little bit later. Adios.